All right, folks, good morning, good evening, good afternoon. Depends on where you're joining us from this big, giant blue space station hurtling through the universe. Could not be more fired up for this afternoon's brief. This is definitely a God moment. Well, every moment is a God moment, but more so this moment than before. You're going to meet just an incredible human being and just a great woman today, wife, mother, and 500-pound head trader in the industry. Reached out a couple months ago about the No Fallen Heroes Foundation and said, hey, which you'll hear about in a little bit, would love to pitch into the fight to help. I said, well, I would love to launch an options on futures service. So God kind of put a Reese's peanut butter cup together, and this is this brief. You're going to meet my buddy Jeff Tompkins from Altos right now. He's going to take the flight controls and give you a brief on our new strategic partnership. I think this stuff is great, man. I was an old stodgy, I trade equity options, and I am in my lane. The more I've dug into his training materials and everything like that, I'm like, why have I not been trading options on futures and different kind of rules of engagement, which are a little bit more advantageous in some areas? Not going to steal any more thunder from Jeff or Nell, so I'm going to get out of the way, and I'm going to throw the flight controls over to my brother here, Jeff. So, Jeff, I am out of your way, my brother. You have the flight controls, and I'll jump in as needed towards the end.
All right, my controls. It's always great to collaborate with a fellow pilot. Although I've never flown a jet, but it's a dream. So yeah, thanks so much, Wiz. It's a pleasure to be here. My name is Jeff Tompkins, and great to see so many people on today. As Wiz mentioned, we have Nell on with us as well, so we'll be introducing her momentarily. But maybe we could start out seeing where you guys are dialing in from. If you want to let us know in the chat where you are in the world. Always great to see where people are coming from. We obviously got a lot of people on here. And if you're not aware, you can pull up the chat off of the GoToWebinar menu bar there, and go ahead and type in where you're dialing in from. And as we're doing that, I'll just give kind of a brief introduction to what we're going to cover, and we'll of course make the attorneys happy and go through our legal disclaimer, and then we'll get into the really fun stuff today. So we're going to be talking about weekly options on futures forecast. So this is I would say a widely underutilized corner of the market. A lot of people, as was mentioned, strictly trade options on equities or options on ETFs, or indices. But it's really an underutilized tool that, frankly, has a lot of advantages that in the retail trading world we don't see. I think nearly enough traders taking advantage of, or maybe not even being aware of its availability. So we're gonna start out by covering some of that and kind of demystifying the world of options on futures, and we're going to talk about some strategy, some methodologies, and a really unique approach to utilizing options on futures. So you're going to get a lot out of our time today, and you're going to walk away with some really great information. So first, before we get into the topic for today, let's start out by making the attorneys happy, right? So we all know that trading involves risk, and this is an educational presentation, so it's intended to be used as information, right, to help you make more informed decisions. And it may include opinions to buying, selling, holding various stocks, other securities. Of course, we're going to be focusing on futures today. But just know that we are not, at Altos, we're not brokers or investment advisors, so we don't provide investment advice or recommendations directed to any particular attendee of the presentation or any subscriber to our service. And as it relates to options, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. So you do need a broker to trade securities. You must meet suitability requirements. And any past results that we cover today are not necessarily indicative of future performance. So as it relates to futures, right? Futures have some significant inherent risk involved with them. So they're not for every investor. And if you know, particularly if you're trading directly trading futures contracts, there's a potential to lose all or more than your initial investment. So we only want to trade with risk capital, right? Money that can be lost without jeopardizing our financial security. All right. So with that out of the way, let's get started. So again, I'm going to introduce our presenters today. Obviously, many of you know Wiz, and maybe some of you know Nell. Maybe a lot of you aren't familiar with me. So I'll give you a little bit of a quick background. Again, my name is Jeff Tompkins. I'm the Chief Investment Strategist of Altos Trading. I've been trading for over a couple decades and have a lot of experience in futures, equities, and options. And as you'll see today, options on futures. I'm also a hedge fund manager, so I do manage capital for my clients at Altos Capital, which is my hedge fund. A lot of the methodologies, strategies, systems that I share in our educational events are those that I deploy in my hedge fund. So this is a really unique opportunity to get kind of an inside look into the mind of a hedge fund manager and how I trade consistently and profitably, not just for myself, but for my clients. So, of course, Wiz, and again, thanks to Wiz for organizing this event and making it happen, is a former managing director of Peak Six Investments. And this is where I really admire him, a F-18 Hornet fighter pilot and a Top Gun grad, which is incredible. Definitely a dream of mine. And I'm also a pilot, but just in general aviation, so I've never flown, for the Air Force or certainly never flown a jet, but would love to do that. So I'm hoping one day Wiz will take me up in the F-18. But he's also the CEO of Top Gun Options and the chairman of No Fallen Heroes Foundation, which we're going to be talking a little bit about today as well. And last but not least, Nell. So Nell Sloan is the principal of Capital Trading Group. She's an industry-leading futures brokerage firm, and she has 25 years of experience in futures and options. So really robust experience. It is also an expert in auto trading, which we're also going to be touching on today in our session. So we're going to spend about an hour together today, and we'll leave plenty of time for Q&A. So you're more than welcome to type in questions in the chat, but we have a lot of things to cover today. So if possible, we'll pause to answer any questions, but we'll most certainly wrap up with a Q&A. So there won't be anybody leaving here with an unanswered question. All right, so what are we going to cover? All right, this is where it gets exciting. So we're going to uncover the mystical world of options on futures. Again, a really underutilized corner of the financial markets, particularly in the retail trading world. And I think by the end of our time together today, a light bulb will go off, and it's going to really illuminate this underutilized asset class and the advantages that can come along with it. And we're going to cover a little known market that opens the door to options on futures for more retail traders. So there's been some changes recently in the options on futures, markets, and in particular the futures markets that we're going to talk about. We're going to talk about key advantages of options on futures versus options on equities, right? So there's some really key differences between the two. If you already are trading options on equities, you have a bit of a head start because there are similarities, but there are also some differences that we're going to talk about. We're going to cover a reliable strategy to forecast trend direction in the futures markets, right? And I'm going to share with you some of the results that we've been able to achieve with this really unique approach. We're going to talk about how to apply option strategies to the futures markets. Now, this is where I get really excited because it's something, again, I don't see a lot of retail options traders utilizing, and that is trade adjustments, right? Adjusting trades when things may not go as planned. So we always have a primary and secondary exit plan for all of our trades. And so that's where, when we need to utilize a secondary adjustment plan, that this unique approach comes in. So I'm going to cover a couple really effective ways that we can adjust trades that don't work out as we initially intended them to, and show you some examples where we're actually able to mitigate a loss or even turn a losing trade into a net winning trade. So once we cover get the groundwork laid, cover the basics, we're going to talk about weekly options on futures, and in particular our weekly options on futures forecast methodology. So we're going to let you know what that is and how it's performed. We're also going to cover auto trading. Again, Nell is an expert in auto trading, so she's going to be jumping in just a little bit and talking to you about some of the really cool benefits of auto trading. And I think that this is good. This has the potential to solve a lot of our problems as retail traders that we might encounter. So she's going to cover that. We're going to go over some real world results. If you guys do know me or have attended any of my educational presentations, you will know that I'm not very fond of hypothetical results. So I do my best, and if at all possible, to share real world results, because there are obviously inherent limitations to backtesting and backdated hypothetical results. So we're going to actually look at some real world results together. So a lot to cover today, obviously, but by the end of our session, you're going to discover how weekly options on futures can be a powerful new weapon to add to your trading arsenal. So whether you're just starting out or you're a seasoned trader, this is really must-have information for today's markets. All right, so let's start out by talking about options on futures. What are options on futures? And we'll talk about some of the similarities and differences between options on futures and options on equities. So options on futures are similar to stock options in that they provide the buyer the right, but not the obligation to buy or sell the underlying asset, while creating a potential obligation for the seller of the option to buy or sell the underlying asset if the buyer so desires by exercising that option. So an option on the S&P 500 futures contract can be thought of as a second derivative of the S&P 500 index, and that's because the futures are themselves a derivative of the index. So this is where options on futures become a little unique relative to options on other products, right? We know that options are a derivative product, and options and futures are a derivative product. So options on futures are kind of a derivative of a derivative. So that might throw in a few, some nuanced complexities, but once we understand this and we understand how to harness the power of this market, I think you'll see it's quite incredible. So there are more variables to consider, as both the option and the futures contract have expiration dates, their own supply and demand profiles, etc. Theta or time decay does work on options the same as options on futures is the same as options on other securities. So we'll talk a little bit about that as well. But futures options allow the owner to control a large amount of the underlying asset with a smaller amount of money, thanks to superior margin rules. And this is known as span margin. And Nell may cover this a little bit as well. But basically, it provides an additional leverage and profit potential. So keep in mind, leverage is a double-edged sword. So if there's increased profit potential, always know that that likely will increase the potential loss as well. So it is a double-edged sword. And this is why it's critical to approach this market, or any market for that matter, with proper risk management, risk tolerance, risk capital, etc. Now, the key difference between futures and stock options is the change in underlying value represented by changes in the stock option price. So a $1 change in a stock option is equivalent to $1 per share, and that's uniform across all stocks, right? Now, going back to the example of the E-mini S&P 500 futures, a $1 change in price is worth $50 for each contract bought. So on top of that, that amount is not uniform for all futures and futures options markets. So it's dependent on the amount of the commodity, the index, or the bond defined by each futures contract and the specifications of that contract. So this is kind of one of those nuanced differences. Now, something big has happened. Just 3 or 4 years ago, I guess it's for now 4 years ago, time's flying, May 6, 2019, the CME introduced a brand new way of trading called micro futures contracts. And this is just a little snippet from that announcement. So they offer what they term micro contracts on a lot of the major futures markets, like the E-mini S&P 500, the E-mini NASDAQ 100. But basically, they're 1/10 the size of their E-mini counterpart, right? So, like if we take the micro E-mini relative to the E-mini S&P, the micro E-mini is 1/10 the size of the E-mini. So what does that mean? Why is that important? Well, it, number one, allows for a lot more flexibility for a retail trader. It reduces margin requirements, of course, relative to position size. It provides you the flexibility to trade with lower amounts of capital and still get exposure to the market. So there are a lot of really great benefits to micro futures that weren't previously available. So it's really opened the door to this market to a lot more retail traders. Now, on August 31st of 2020, the CME introduced options trading on these micro futures. So there's now the ability to trade options, not just on E-mini futures, but on micro futures. Okay, so this is a really another big milestone in this market, and it's a really big change. Now, again, each of these bite-sized micro futures contracts are just 1/10 the size of the traditional E-mini version. All right, so again, think flexibility. It gives us a lot more flexibility to position sizing, risk management, and think access. It gives us a lot more access to this market that previously wasn't there for a lot of traders, right? Now, let's talk about liquidity. Again, I think another really overlooked component of retail trading, right? I know that at Altos, we have a lot of members come into our circle. They're brand new, at least to us, maybe not to trading, but if they've, for instance, been trading options in the past, I noticed, fairly frequently that they're trading illiquid products, things that don't have sufficient liquidity. So this is really important because lack of liquidity, for instance, widens bid-ask spreads, makes it more difficult to fill orders. So we need to make sure that we're trading something that has sufficient liquidity. Now, incredibly, and this number is just continuing to go up, we've already seen over 1 billion contracts traded in the micro E-mini futures options. That's think about that, 1 billion. And again, this was published by the CME Group back in 2021, so November, so about 1.5 years ago, and that number has continued to go up. So liquidity is hugely important, and the good news is it's available to options on futures traders. It's sufficient to trade these without being impacted by illiquid, the negative impacts of illiquidity. So let's talk about some of the options on the key features and benefits of options on futures. Okay, so number one, they're more capital efficient, and Nell will shed some light on this as she talks about the brokerage side of things. But options on futures are more capital efficient. Now, this to me is a big one right here. 24 hours a day, 6 days a week, the futures markets are open. Okay. Now, if you guys have traded futures, or if you haven't traded futures and you've primarily traded in the equities markets, right? You've got a fairly limited window during the trading day to execute trades. Now, we know that when the U.S. markets close, for instance, at 4 p.m. Eastern time, that lots of things in the world can happen, right? We saw it just recently in 2020 with the advent of the COVID pandemic, right? So these things, the world doesn't stop rotating when the U.S. equities markets close. So these things happen after hours. They happen overnight in other parts of the world, and they impact what happens in the U.S. equity markets the following day and beyond, right? And if we can't act on that, it puts us at a major disadvantage, right? So this is, again, to me, one of the huge advantages of the futures markets and options on futures, is the greater market access. You also have a wide variety of asset classes. So you have futures available on indices, metals, oil, grains. You can trade futures on interest rates. So there's a lot of broad market access here. Also, futures markets don't have a pattern day trading rule. And again, something Nell will probably touch on. So there's no pattern day trading rule like you would encounter in the equities markets. All right, so those are some of the key benefits of options on futures. And we're going to talk about how we harness these benefits now. All right, so let's kind of back up a little, and because we're going to talk more about options on futures, but let's just talk about the futures market, because remember, this is a derivative of a derivative. Options on futures are a derivative product of a derivative product. So taking that into consideration, aside from that part of it, if you trade, for instance, options on equities, there's still an underlying security we're trading the options on, and we need to have a reliable methodology to base our options trading decisions on, and that's going to be related to the underlying security. So before we even place an options on futures trade, we need to look at the variables related to the underlying asset, say in this case a futures contract, right? So I use what I call the powerhouse of four to do this. So number one, I look at trend, right? We need to know the trend direction. And so that could be up, it could be down, or it could be sideways, right? But we need to know the trend direction. Once we've identified the trend direction, right? So trend is just directional, right? It could be, a parabolic uptrend. It could be, inconsistent wavy uptrend. It could be an uptrend that involves a lot of, opposite retracements that then are followed by a subsequent resumption of the trend. There's a lot of ways to obviously define the trend. So that's why we need to also look at momentum. So momentum is going to tell us the strength of the trend, right? So if we're deploying a particular options strategy or methodology, let's say, for instance, vertical debit spread, which we're going to talk about here in just a second, we want there to be strong momentum that goes along with that directional trend. Now, if we're using, let's say, a credit spread, which we're also going to talk about, we obviously want to, there's still some directional component to that strategy, but we want to, obviously make sure we're on the right side of the trend, but the momentum might not be as critical, but we still want to know what the momentum is, okay? And then number three is support and resistance. So this kind of comes into play in kind of two different buckets. So number one, in terms of support and resistance, is we want to make sure that if we're taking a directional trade, so let's say we've identified an uptrend, we've identified that the momentum is in that uptrend is strong, and then we need to determine kind of the broader structure of what that looks like on a technical basis. So is that uptrend, kind of where in the cycle is that? Is it off of a support level? Is it And so that's kind of the first bucket, the beginning of that trend momentum. And then the other part of the bucket, the other critical aspect is overhead resistance in the case of a long position, or lower support in the case of a short position, and not trading into that, right? We don't want to trade into a critical, take a long position into a critical level of resistance. And so if we identify these levels, it gives us an extra edge for not just trade entry, but trade management and exiting the trade successfully. All right, and so lastly, in the powerhouse of four is fundamentals. So what we do is we not just analyze the technical variables, the strength of the trend direction, the support resistance areas, which we kind of refer to as supply and demand points, but also fundamentals. So things can look really good technically on a chart, and for instance, take a futures contract like crude oil, right? That's fundamentals are very important to a market like crude oil. So that can't be ignored, right? We need to understand what's going on in the oil market on more of a macro scale, and how it might impact the trend, the momentum, and the support and resistance. So this is, again, what I call the powerhouse of four, and I combine these four things into my trade decisions. And historically, it's given me an incredible edge, and I'm going to show you some proof of that when you combine these four things. Okay, so let's get into futures option strategies. Okay, 1 second, I'm going to take a little sip of water here. Okay, so futures option strategies. Essentially, we can apply any equity option strategy, any strategy that we might deploy using options in the equities markets, to options on futures. Okay, so I'm going to go over 3 strategies that we use with options on futures. Okay, so there are many, many more, and there's all kinds of fancy things you can do with options, right? And so we keep it simple. We use what we know works, what's worked historically, and what works in live markets. And so these are the main strategies that we deploy. Number 1, credit spreads. So if you're not familiar with a credit spread, it involves selling a high premium option while simultaneously purchasing a low premium option in the same security. And that results in a credit to the trader's account. This is why they're referred to as credit spreads, but it's basically a vertical option spread, right? So you've got 2 legs of the option, same expiration, same underlying security. All right. Now we have debit spreads. So just like credit spreads, they're vertical, what we call vertical. So there are 2 legs, a long and a short, same expiration, same underlying security. But what's different with debit spreads is they involve purchasing a high premium option while selling a low premium option in the same class of the same security. And that results in a debit from the trader's account. So that's, the big difference you're going to see is if you place a credit spread, you receive a deposit into your account upon initiating the trade. A debit spread, you are debited money from your account to place the trade. Okay, and these 2 strategies have different risk graphs, different profiles, different considerations, right? And of course, one of the critical things, and I would say here that another big mistake I see people make in the world of options is that they don't deploy the correct strategy to relative to the asset, right? Or the market conditions, or the powerhouse of 4, the trend, the momentum, the support and resistance, and the fundamentals. Because often what happens is we learn an option strategy, and I'm guilty of this. When I first started trading, this is what I did: is we apply that one strategy to every circumstance, right? So like when I first started trading options, I started trading credit spreads, and unfortunately, because I didn't realize this at the time, I was placing option credit spread trades it under the wrong circumstances, right? For instance, implied volatility might not have been conducive to the strategy, or any of the powerhouse of four might not have been conducive. So here's where it's critical to have a toolbox of a multitude of option strategies that can be applied based on the appropriate market conditions or asset. And then, so third is put writing. So a naked put is when a put option is sold by itself. So it's uncovered. You don't, unlike the credit spread and the debit spread, you don't have two legs. It's just a single strike price, and it doesn't have any offsetting position. So when the put options are sold, the seller benefits as the underlying security goes up in price and or implied volatility drops. So similar to a credit spread, you receive a deposit into your brokerage account upon initiating the trade. So the idea here is we want the underlying security to remain above the strike price of our short puts to retain the credit that we received upon initiating the trade at expiration. Okay, so these are the three core strategies that we apply to the options on futures markets. All right, and when you select the appropriate strategy for the appropriate asset, futures asset, and market conditions, that alone is a huge edge. But again, unfortunately, we may not have the experience or the knowledge or the understanding of a lot of the nuances of options to allow us to do that. And again, I was in that boat, 20 years ago. So this is another critical component of successful options trading. Now, there is no strategy out there. There is no system out there. There's no indicator out there. There's no software out there that can allow you to win 100% of the time. We all wish that there was, but it doesn't exist. And it never will exist. So most options traders, or any retail trader for that matter, has, and this is very important, has a risk reward tolerance, right? So they determine upon putting the trade on that this is my profit target and this is my stop loss, right? And that's important. You should do that, right? To define your risk. Now, here's where we're going to diverge from what most retail traders do when things don't work out, because inevitably there's going to be losing trades, right? So hopefully you can kind of see here we're building up a confluence of all these variables to create an edge so that we have a positive trade expectancy and can make money over time. So when we talk about a trade not working out, right, we always hope, and it's our intention when we enter a trade, that it's going to work out as we hope we intend it to, right? And that's where our primary exit strategy comes in. So the trade works out as initially intended and the profit objective is attained, all right? And in most of the options strategies that I deploy in my own trading account, in my hedge fund, and out to our members at Altos, we do that about 85 to 90% of the time. Okay, that's a really good strike rate, right? That's a good win percentage. But never be fooled by win percentages, because the true secret sauce is trade expectancy. You can have a system that wins 90% of the time that loses money in the long run. You can have a system that wins 30% of the time and makes money in the long run. So that's only one piece of the puzzle. We also need to look at other variables, and there's actually a formula out there for trade expectancy. Okay, so it needs to incorporate your win percentage, your average loss and gain in the trade, each trade, etc. So 85, 90% of the time, historically, going back 8 years, when we started providing options recommendations to our members at Altos, we can get out of that primary exit strategy. So that's really good, right? But of course, not every trade can make money. So we need to have a secondary exit strategy. We need to make an adjustment to the trade if deemed necessary, right? If things are not working out and there is a viable way to adjust the trade, then we use it as a backup plan. Keeping in mind, we don't want to exceed our risk tolerance by doing that. So that's an important consideration. But one of our favorite adjustment strategies often results in even greater profits. I'm going to show you a really cool example here, because I discovered a unique trade adjustment technique that can potentially turn losing trades into winners. And so that may not always be possible. We may, in some cases, be able to mitigate a loss to reduce what would have been a bigger losing trade. And in some cases, we can take that losing trade and transition it into a net profit. So let's talk a little bit about options trade adjustments. So as I began to implement different ways to adjust options trades, I saw an incredibly dramatic difference in my overall results. This was a real game changer for me, because prior to that, I was just placing the options trade with a profit target and a stop loss and letting it run, right? Whatever happens, happens, right? The problem with any directional option strategy is that nobody has a crystal ball. Okay? We can give ourselves an edge, but we can't know with any certainty, or I should say we can't know with 100% certainty what the outcome is going to be. Okay? And this is where I think it really separates, the amateur trader from the seasoned veteran, right? The trader that is comfortable knowing they have a positive trade expectancy, it can make money over the long term. So when we're trading options, there's always a risk of loss. It's a cost of doing business in the trading world. It's probably our biggest overhead, because overhead in the trading world is relatively low. You just need a computer, an internet connection, a brokerage account, obviously with risk capital. But when we look at the operational side of the trading business, it's the losing trades that are really our biggest overhead. Okay, so obviously, just like any other business, when you have overhead, you want to minimize the cost of your overhead and maximize your profit potential. No different in the trading business, right? We want to minimize that as much as we possibly can, and this is where trade adjustments come in. And the good news is, when a trade doesn't work out as intended, it doesn't have to be an inevitable loss. So a simple tweak can often save the trade and could even result in greater profits. So let's talk about how to adjust a losing options trade. Okay, so I couldn't put a number on it, but there are many, many different ways to adjust trades. Obviously, the options market is quite complex, so there are a wide array of ways to adjust these types of situations. So I'm going to share a couple of those with you. Number one is rolling. So rolling involves closing out our initial trade and opening a new trade at a further out expiration. Typically, we'll use the same strike price and same number of contracts, but the key is we need to do it for an equal or greater credit or deposit into the account. If we're, like, for instance, adjusting a credit spread. Okay, that's what I call staying net cash positive. Okay, so that's one way to adjust, right? And we only want to make this adjustment if our initial analysis hasn't changed, right? If something changes, then we may need to adjust in a different fashion. One of those is delta neutral hedging. So, for instance, looking at one of our core strategies, put writing, if you want to transform a naked put into a delta neutral position, you simply buy to open enough at the money or near the money put options in order to complete the year as close as possible. We want to get the delta as close to zero as possible, offset the positive delta of the existing short put options. So what does that all mean? It sounds like kind of confusing and complex. Well, what it means is we're adding a long strike to our short put strike, and by executing that adjustment, so there it allows us to neutralize our delta. Now, again, if you're familiar with options, you know that delta is a moving number. So it's measured by gamma, right? So it's not static. So if a futures contract should continue to fall, for instance, if we've written a put on that futures contract, you can profit on the put options that you purchased. And if you had neutralized your delta, if that underlying futures contract continues to fall, it will offset losses on the ones that you sold if the futures contract continues to move lower. And this is more of an aggressive adjustment technique, and we'll typically do this if a short put moves in the money aggressively, right? So we try to match our adjustment technique to the circumstance. Now, delta neutral hedging can be applied to virtually any option strategy. So like with credit spreads, another one of our core strategies, to transform a credit spread into a delta neutral position, if either the short put or short call strike is breached, one way to delta hedge that vertical spread is to close half the contracts at the breach strike. Now, again, this is dependent on where the underlying future is trading relative to your strike prices. So you don't want to do this blindly, and there are other ways to delta hedge, but this can help offset losses and even produce a profit if the underlying continues to move past the spread. Okay, so these are two core adjustment strategies that we incorporate. And there's some crucial tips that go along with those. So as I kind of alluded to, trade adjustments can be both defensive and offensive, right? So what that means is we want to match our adjustment to the circumstance, right? So as an example, the delta neutral hedge may be more appropriate in an aggressively moving, directional market. A rolling adjustment might be more appropriate, for instance, in a sideways market, right? And there's exceptions to all those rules, but that's the key takeaway there. So you want to match the strength of the move in the underlying security. So as I mentioned, if the market's in a sharp decline, a delta neutral hedge might be appropriate. And these types of hedges can work out really nicely if your position, imagine if you didn't put make the adjustment or put the hedge on. Your position just continues to get in the hole and lose money, right? We've all experienced that at some point. Okay, and this is where it can really be beneficial. If the underlying slightly breaches your spread, like I said, rolling can sometimes help us ride out the trend until it reverses. Okay. So ideally here, we want to extend our time horizon, give ourselves more time for the trade to work out the way we initially wanted it to, without either adding risk at all or adding dramatically more risk to the initial risk that we had in the trade. Okay. So that's the trick with adjustments, is not only knowing how to execute, but when and what to adjust. Okay, so those are really critical tips. Now let's look at an actual example. All right, crude oil futures. This is an example of a real world adjustment that we implemented. This was last year, June 27th. All right. Looking at the CL, the crude oil, July week 3 options on futures, we alert our members to an opportunity for a call debit spread at the 110.50 and the 111.50 strikes. Okay. And the debit for this trade was 46 cents per contract. All right. Now, if you're familiar with the call debit spread, right, we want crude oil, the underlying futures, to move up, and we need to do so at a specific time close to when we place the trade and have enough of that trend momentum, etc., that we talked about in the powerhouse of 4 to allow that trade to produce a profit. So you have to have, with the debit spread, fairly significant directional movement in addition to some other variables, right? So we need to make sure that we're trading at the appropriate implied volatilities, etc. But even if you do everything right, there are times when things don't work out. And this is one of those times. So July 14th, crude oil had gone down, right? Instead of up. In fact, it went down. You could pull up a chart of crude oil from last year, but it went down a lot. It was going down a lot. Okay. So if we just done what most traders do and left that alone, the potential loss was $460 per contract. So if you traded one contract, you'd have a potential loss of $460. But there was a backup plan here. So on July 15th, we adjusted this trade by rolling what we call down and out. So we rolled down in strikes in our spread and out in expiration to July week 5, set up another call spread. It's 71 per contract. Okay. So what happened? Well, only 4 days later, we were able to close that crude oil debit spread for $1.35 a contract. That's almost a double, right? Turning that $460 loss into a $640 profit on the adjustment. So if we subtract the initial trade from the adjusted trade, a net of $180 per contract. So if you were trading 10 contracts on this, you would have booked $1,800, less any broker commissions and fees, etc. But this is an example of an adjustment using debit spreads. Okay. So this is real world, guys. This is something that really happened. It didn't initially work out as we intended, but we were able to make that adjustment. So I want to tie some things together here, and then I'm going to pass it over to Nell. What we've taken is the powerhouse of four methodology, right? Unique approaches to the options on futures markets, utilizing E-mini and micro options futures, and created weekly options on futures forecast. So we've combined everything I've revealed to you today in a comprehensive package designed to get you up and running in the exciting world of options on futures. And you can start this week, right, with our weekly options on futures forecast. So everything that we talked about today is a core methodology of weekly options on futures forecast. And I'm going to share our results. So we began implementing this new model in the options on futures market in February of this year. Okay, so we incorporated this powerhouse of four model starting February 6th. And these are trades that we sent out to our members at Altos, utilizing here put spread, credit spreads and debit spreads. Okay, so you'll see under the option strategy column, we have kind of a mix of credit and debit spreads across different futures markets. We got oil, we got the Russell, gold, GC is gold, the E-mini S&Ps, the NASDAQ NQ. So we're tapping into a number of markets here. Now, on average, we send out about 2 to 3 trades per month to our members. Okay, so since we began implementing this new model, we have closed out 11 positions with almost a 91% win rate, with an average time in the trade of just about 11.5 days, and a profit of $9,425 per 10 contracts traded. So this is totally scalable based on your account size, your risk tolerance, etc. But this would be based on 10 contracts. So that is an average profit per trade, and this is actually kind of a component of what I talked about with trade expectancy. We need to know what our average profit per trade is to calculate our trade expectancy, and that has to include both, obviously, wins and losses. So we had one losing trade so far this year with this new strategy, and then even when we incorporate that, again, these are based on 10 contracts, so and they're not in the micros; these are in the minis. So you can, if you have a smaller trading account, implement these with the micros as well. But that's an average profit per trade of $856.82. Now, of course, past performance is not necessarily indicative of future results, but this is historical proof of what can be accomplished using this approach in this market. All right, so really the future of trading is here. The CME has made these incredible tools available to us as retail traders. With the E-minis, the micros, the options on futures. So I'm gonna pass it over to Nell here in just a second, and we're gonna talk about auto trading, because this is, to me, a really, really cool opportunity with a lot of critical benefits. And some of those are removing the guesswork, the potential of missing a trade, freeing up your time, etc. Right? So there's a lot of benefits. So Nell, I'll pass it over to you and let you take it away and talk about auto trading and CTG.
Outstanding, and thank you. Everybody can hear me? Yay, thumbs up. First and foremost, thank you so much, Matt and Jeff, this is outstanding, and thank you for the opportunity. All right, so let's get into the fun risk disclosure document. Bottom line, there are absolutely no guarantees. I'm going to summarize this for you. Anyone who's been around in '08 would certainly know and have experienced their 401ks diminished probably on average 50%. We're at a different day and age where the ease of transaction is much quicker, so we have to be made aware of what we're doing, who we're doing it with, and provide significant transparency, which is what we do as a firm as well. But trading in futures and options and derivatives entails significant risk, must be understood prior to trading, and may not be appropriate for all investors. Please contact your account executive representative for more information, yada, yada, yada. You can read that. Happy to email it to you. All right, next slide. So auto trading, what exactly is auto trading? There's different variables in which orders can be executed, but the ability to follow what you're subscribing to. So the weekly options on futures forecast signals will be coming to us. We will execute on your behalf. You will sign what we call a letter of direction, which is basically a form where you're giving us authorization to trade something specific program, quantity described, etc. We're not just doing what we want to do when we want to do it. You're still able to see what we're doing when we're doing it and still have, in theory, control of the account. You would therefore set parameters in terms of controlling it, the number of contracts or units you wish to trade. But the most important thing is that the account is your account, and we're not trading frozen butterfly wings or whatever we want. We just have that limited authority. Followed by, is this the, okay, in terms of your account and how you could have it, the attractiveness also is that you could have the account titled in your name, you could have it in a corporate name, an LLC, you can actually have it funded with IRA funds, but bear in mind, there's a component with IRA, of course you have limited capital there, but there's a marginal increase in the margins on IRA, but you can do a self-directed IRA account with our firm. There's even checkbook IRAs, which I've never heard about till recently, partnerships accounts, and so forth. Now, when we execute orders, we call it like a block account. Everybody's account is individual in your name, like we were mentioning earlier, but at the ease of execution, we're done through one account number that has a pre-allocation. So it's predetermined before the order is executed on who's going to get what trades. There's no parental treatment. The orders are done, they're executed. You will get an email notifying you of that. You will also know that if there's a split fill, everybody gets the same fill. It's just averaged out. And you get access to the platform. You can watch the transaction take place on the trading platform as well. Email notifications are there. Platform access is there. You get statements at the end of the day as well. You could view it on your mobile device. And like I said earlier, everybody's getting the same executed price. As I mentioned earlier about you having control, if you wanted to add to the account, if the portfolio was successful in meeting your expectations and you wanted to add, you can do so. We do enable ACH. You could add to the account, and then we could discuss and send you an updated document, DocuSign, where you're giving us the authority to change the quantity that you so wish, or you could even pause it. You know, if for whatever reason you want to pause, you can do so as well. Okay, so I'm sure we all remember COVID. When COVID took place, there were platform issues in some of the bigger institutional firms. We were fortunate not to have those hiccups, but the auto trading benefit also enables the shift of liability to be on our firm, on us. And that means that if we have backup upon backup, and there's still no guarantee that everything's going to work, but if one platform of execution fails us, we have a separate platform that we can utilize. It doesn't alter your ability to, you know, to see the fills per se, but it certainly mitigates that exposure. Data fees. I don't know how many people are paying $125 a month for the ICE exchange, but that's a little exorbitant. You will not have to pay data fees. That's a big plus. And I don't believe they charge data fees for stocks, but they do on the future side. You will not have to deal with that, nor platform fees or leasing fees for some of the platforms. Cost or execution is basically the same. So, you're shifting the responsibility on us. And I don't know how many self-directed traders here have ever had a mistake in executing trades on their own, but I'm willing to bet you've had at least one or two. And again, that lies on us to make sure that we do the order within what you signed up for. This also frees you up for other programs. You could open up additional accounts. If you have an account with us and you do want to trade another program, you can do so. We can use existing paperwork on file as long as you sign off on us being able to do so, and you could have an additional account. Emotions. We're all emotional, right? Money's an emotional thing. We work our ass off, we work our butt off to earn it. We have to understand the risks versus the rewards. But when you're giving someone else the baton to go ahead and do the trades, it's more likely that they will be executed than if you were to do some of them yourself. And yes, we have a great team. All of us are here as you're attending this. And I can tell you that CTG is very unique in that we have pretty much the same personnel that we've had going back probably 15 years. We have sustainable employees. They are outstanding. If they're listening now, I so greatly appreciate all of you. And I think they go on vacation once in a while to make sure that we really do appreciate them. But we're very blessed to have those that serve us, and customers really feel that they're getting the hands-on treatment. And if our employees are happy, then you're happy because you're being served by them as well. The options on future forecasts, I think Jeff covered. You'll have opportunities every month for us to execute on your behalf.
Yep, I can kind of go through this now and then pass it back to you.
Okay.
So yes, the options on futures forecast, as I mentioned, it covers 3 to 4 new opportunities every month on average. Maybe say 2 to 4, because it's based on market conditions and an opportunity presenting itself. We never want to force a trade for the sake of just putting a trade out. So we want to make sure that it meets all the criteria. And so so that's kind of so. If a trade goes wrong, we send out exact instructions on how to adjust the trade. Obviously, if you're auto trading, that would be less applicable to you. And then when it comes to closing out the trade idea, we'll send a notice to your email or your smartphone. You actually get a text alert. So it's really straightforward to learn and implement. And we want to help you have the opportunity for life-changing days like you've seen today. And we're going to give you access to our weekly options on futures forecast that gives you the ability to follow our top trade ideas. So this one-time opportunity will allow you to lock in the founder's rate. Okay, and that's why we're here today, is to give you a really great opportunity to get in as a founder to our new approach to options on futures, and join us to discover how to trade options on futures week after week. Now, here's something that I think is just incredible, and I don't think I've ever seen a trading educator or trading education firm, or even a broker for that matter, donate proceeds to charity. So this is where I'm going to pass it back to Nell so you can talk a little bit about this.
Okay, this will be a harder conversation for me, so I might have to hit the no camera. I can say this. I think everybody listening today knows we're kind of living in this divided country, right, where we have tagged everybody as, politically they're Democrat, Republican, or they're liberal, or they're conservative, whatever. But the one unity that we all have is that of our veterans. I don't think there's a single person listening that doesn't respect and admire those that are sacrificing their lives for the liberty for this United States. And my son, Frankie, is my firstborn. 1 minute. There's an epidemic, and this epidemic is suicide. And anybody that Googles, you'll see that we have like a 41% increase of veterans committing suicide. I called my nephew who joined the Army. My nephew told me that when he joined the Army, they would have morning briefs about suicide and how many have taken their lives. He said they would pass out suicide flyers and suicide hotline numbers to address the serious epidemic, and it is. All we heard about for years was COVID, and what we have to do to fight it. Yet this is a fight that we have control of. We can change their lives. You know, my son Frank is no longer with us. I do have a younger son, Travis, that tells me every day, Mom, you can't change the past. You got to live in the moment and change what we can. So No Fallen Heroes Foundation is a blessing that I wish to God I knew about it earlier. But it is a way to take control, and so much in our life we can't control things that happen. We know that, right? But it is a way to take control. And I was so shocked to learn so much about the statistics, as horrific as they are, the lack of coverage on this. You know, more veterans are dying from suicide than combat. And it's something that we can do something about. And there's different charities, and they're going to mean different things to all of us. But when I was talking earlier about the divide, this is the part where we actually unify. The picture here with Frankie and his friends, that picture was taken a week before he took his life. So he had 3 weddings to stand up for. He was going to be best man. The reality is, what do we do when we're derailed on personal stuff? We turn it around by shifting it away from ourselves, and we start focusing on others and what we can do to help others. That's what it's about, you know. And when you do good, you lead a healthier lifestyle. I mean, we're all here learning how to make money. And I think the product that we're sharing with you, I'm very excited with. And by the way, I trade my own money with these products too. But I also think it's important to feel a sense of unity and do something, especially with any of us putting on the TV. It's just disgusting what's going on. Let's start focusing on positive things and creating positive change. And the No Fallen Heroes Foundation is going to do that. We are going to excel. We are going to save lives, because this is something we can do something about. You know, we could keep writing checks for American Cancer Society and hope to God we come with solutions for that. But right now, I have the total confidence and belief that this is something that we could create change on. So, yeah.
Well, thank you, Nell, for sharing that very personal story. I know it's difficult, but an incredible, I think, you know, gesture to honor our veterans and help with this, you know, severe problem of you know, that veterans face upon returning from very difficult situations. And so I think it's just so cool that when you join Weekly Options on Features, knowing that you're helping the veterans out there. So can't thank Nell and Wiz enough for creating this opportunity to do that. So thanks again, Nell. And let's talk now about what to expect with the Weekly Options on Futures forecast. All right, so when you join, first, I'm going to be using the futures formula to identify what I see as the best futures trade opportunities. So this is something I'm doing every day, looking for opportunities. So I'm doing all that legwork for you. And I do my own analysis using that powerhouse of 4 for each opportunity to find the one that I think has the most potential for big gains. And once we get that confirmation, I then make a post on our interactive spreadsheet. So you get access to the spreadsheet showing the trade idea, you get a text alert, and if you choose to do so, you can even auto trade these, which again, is another really huge opportunity here. Now, step 4 is after the entries found and outlined on the futures spreadsheet, we post the options play. Okay, so again, that's where you're going to get a text alert, or if you're auto, and, you know, you can go into your brokerage account and place the trade, or if you're auto trading, you're going to be aware that there's a new opportunity and that it will be executed for you. Okay. Now, finally, we'll send you an email or text with all the research and the trade instructions, including the option strategy that we think has the best chance of success. So You're going to know exactly what strategy we're deploying, whether it's a debit spread, a credit spread. You're going to know all the details of that strategy with the strike prices, expirations, the profit potential, the risk profile, everything that you need to know to make an informed decision. All right. Now, our goal is to provide you with the expert knowledge and empower you with information to make educated decisions. And if you choose, you can start following our analysis and recommendations. And you've seen what our performance has been this year, and it's incredible. And we are going to fight indefinitely to continue to be successful with options on futures. But more importantly, we want to give you the opportunity to start winning and making money with our research. That's why we're here, right? And that's why it's important to me that you don't miss out on any of our upcoming research or trading ideas. Okay, so you're going to get a whole suite of how-to video tutorials. Okay, so if you have never traded options before, or you've traded options on equities but not options on futures, we're going to give you all the education so that one day you may decide, I feel like I can do this on my own now. I've got all the information and knowledge I need. I've followed along with Jeff's recommendations, and now I feel like I can be self-sufficient. So we throw in a suite of education to help those of you who want to do that on your own into this. So as a loyal subscriber, you are who we want on board when big gains come rolling in. And I've shared some of those with you from this year. And that's why we've worked out a very special deal for you. So to make that happen as quickly as possible, we're releasing this opportunity to the first 50 people that join us today in the weekly options on futures forecast. So here's what's included with the package. You get an annual membership to weekly options on futures forecast. There's no contracts, there's no commitments. This actually does not auto renew. So it's really up to you if, after your first year, you want to continue trading alongside us, or maybe you've reviewed all the education in the members area and at that point feel confident to be self-sufficient with the strategy, then that's your option. Okay, so there's no commitments, but our annual membership retails for $5,000. These are the retail values, guys. We're going to give you an incredible deal here, so stay tuned. You also get the option to auto trade with CTG, the CTG brokerage firm. Okay, that auto trading, there's not going to be any charge to you for that feature. It's a $997 value, but that's included in the package if you decide to auto trade. Now, not only are we giving you the education, giving you our research recommendations, we're going to hold live sessions every Tuesday at 7 p.m. Eastern time. This is a great opportunity, and I'm the one that hosts these, that holds these. So you'll get direct access to me on these weekly sessions. And not only do we cover options on futures, we cover a host of other markets and strategies. Okay, but it gives you the opportunity to interact with me live and ask questions, share ideas. Normally that retails for $597, but we're giving that to you as well. I'm also going to throw in my ebook, How to Fix Losing Options Trades. So this is another critical part of the education. I shared with you a couple adjustments, and due to time limitations, didn't have the ability to go through all of those in detail. But I'm going to give you my ebook that does do that, that goes into all the detail and shows different techniques and examples that I think is a great complement to the weekly options on futures package that normally retails for $97. But ultimately, we're here to help you learn to trade options on futures. This really incredible market that previously wasn't widely available to the retail world, and some of the recent CME group changes that have made that possible. So the package has a retail value of over $6,600. Okay, so if you were to go buy all this from us individually, there's obviously a very high value on it, and I think you can see why when you understand all the education that comes along with it and the results that I've shared with you today from this year, right? So I think it's well worth it, but we're going to slash the price on this just for today, okay? So for being here today, we're taking 78% off the retail price for this entire package. So you get the full suite of products and services to jumpstart your success. You get the education, the video tutorials, the ebooks, You get the live sessions Tuesday evenings every week. You get all of my research on the options on futures trade ideas emailed to you, texted to you, and you get the ability, if you so choose, to auto trade all of these with CTG. So there's a host of obvious benefits here, but also it's obviously a really good deal, right? Almost 80% off what you'd have to pay at a retail price, all right? So I'm going to tell you how, and maybe Wiz or somebody could put this in the chat for you as well, how to claim one of the 50 seats today. altostrading.com/WOF, so weekly options on futures. And again, the first 50 seats can get the 78% off the retail and the package. You can still buy it if the 50 seats fill up, but it's going to return to the full retail value. Okay, so if you want the 78% off, this is a really a one-time opportunity, okay? And all you need to do is go to altostrading.com/weekly options on futures. All right, first of all, I want to thank everybody for being here. I hope you, it kind of lit that light bulb of and illuminated, you know, this incredible market, this incredible opportunity with weekly options on futures that, again, I think is so underutilized. And I'm just really excited about what's to come for our members and all the incredible opportunities that are on our radar. And we're going to be sharing those with you here over the next couple of days for those of you who join us to the weekly options on futures forecast. And now I want to open it up to Q&A. And again, we're going to do our best to answer every question that you guys have. I don't want anyone leaving here with unanswered questions, but if you're like me, you may walk away after we wrap up and be like, oh shit, I forgot to ask that question. Well, that's okay. You can contact us in a couple ways, support@altostrading.com, or give us a jingle at 800-895-9348. Okay, so a couple ways to get a hold of us. If you choose, you can also place your order for the package that way. But likely you know, we've got hundreds of people on the session, so the phones are going to be ringing off the hook. So you may have to leave a voicemail if you don't get through, but you can also do it that way. The easiest way, altostrading.com/weekly options on futures. And again, here's everything that's in the package. So I'm going to go ahead and open up the Q&A. And Wiz, maybe if you could assist me, it's a little difficult for me to follow all the chat that's coming. If you want to pick out some questions, and
yeah,
maybe it'll be a question for Nell or for you, Wiz.
Yeah, man. I can scroll through the chat box here. There'll be some in here for Nell and some in here for you, because there's a ton of great questions in here. Before I start reading off some of the questions, first of all, Jeff, thanks for this. Thanks for the insane discount and hooking folks up. I appreciate it. And obviously, folks, Nell, just God bless you and your beautiful family. Just thank you for your sacrifice. Thank you for your commitment to pitching into the fight here. Frankie is here. He's with you. He's with us. He's with my sister, and they're pushing us forward, right? You and me. Failure is not an option. Failure is not an option. And even though we're all together, obviously today, you know, a little bit of ego still misses a hug and all that stuff. But we'll, you know, in the span of eternity, which we will get to spend together with God and our loved ones, it just kind of sucks for a little bit. But thank you, Nell, for pitching into this. And I think she covered this, but a portion, we can't really figure it out yet since we're just getting airborne, is going to go to the No Fallen Heroes Foundation from CTG. So that's how Nell is pitching into the fight here. And we'll figure out what that is as we go along. It's better than nothing right now, which is a lot more. So, and you know, being a registered entity, she'll disclose all that stuff, and you guys will know everything, which is awesome. So thanks again, Nell. Okay, let me scroll up. What are the contract fees for CTA brokerage? Maybe that's a Nell question there. What are contract commission fees for CTA brokerage?
We're charging $4.
Okay. $4. Kevin, what are there any roadblocks for non-U.S. traders? And this will take care of some other questions. Somebody from India up above. Nell, can non-U.S. folks open
Yes.
an account with y'all? Oh, perfect.
Certain countries are restricted, but no problem with India.
Okay, so India and Kevin,
UK, no problem either.
Okay, cool. Kevin's, I think, up in our 51st state, Canada, so we're good to go. All right. Jim, what is minimum account size to do auto trading?
We were, Jeff, I think we went over this. 10,000 would be ideal. The margins are pretty low on a lot of these credit spreads, but ideally we think 10,000 would be perfect.
Okay, perfect. Jeff, how long? Jeff, how long has this program been around? And sorry if I missed the track record. Is this on the website anywhere? So Jeff, asking the question, I'll get you the replay where you can see this stuff. But Jeff, you can jump in there real quick.
Yeah. So I've been trading options on futures for a long time. As far as the weekly options on futures forecast, and I'll put that track record back up for you here. Let's see if I can get this to show up. Sometimes it's a little tricky. May not want to go. Yeah, it's not. I'll get it up for you here. Let me just go back here. So we launched this new approach. Here it is, to options on futures in February. So using the new Powerhouse of Four approach and applying to the options on futures market, put out our first recommendation with our new options on futures strategy on February 6th of this year. So we've currently closed out 11 positions this year so far, with all of those but one being profitable, so just under a 91% win rate. Average time of the trade is about 11.5 days, and the P&L based on 10 contracts is $9,425 with an average profit per trade of $856.82 per 10 contracts.
Awesome. Christine, what is the cost after 1 year following the initial discount?
Yeah, so great question. You are grandfathered in. So if you decide, number one, you get to keep all the education, you get to keep your ebook and everything else in the package, whether you stay with us for a year or 10 years. So if you want to continue receiving the recommendations, you're grandfathered in at the 78% discount. All right, so that's grandfathered in. But again, there's no commitment or contract, so that's up to you after your first year.
Awesome. Okay, John, bunch of questions here. I think Nell answered a couple. Can we open accounts in the name of LLCs, IRAs, or trust names? I think you answered that, Nell, right?
Yes, you can.
Okay. John, a couple questions. Will we be able to write iron condors on futures? And does your probability calculations come from Black-Scholes?
Yes, we do incorporate Black-Scholes, of course. Yeah, so and again, a lot of that's going to be covered in the education as far as like the trade adjustments and the methodologies for strike price selection, expiration cycles, etc., and in particular with weekly options. Covered in the education. We didn't have time to really get into that today. So yes, we use, closely monitor and consider the Greeks, delta, gamma, theta, vega, and what was the other part of that question?
It was about Black-Scholes and iron condors.
Oh, iron condors. That's right.
Yeah.
There is a possibility we could put out an iron condor recommendation. It's not one of the our three core strategies, but it's not outside of the realm of possibilities if we deem that it makes sense to do so. It's just not one of the three core strategies.
Okay. Ram, how much capital / margin do we need for 10 contracts shown on performance track record?
Would probably be one for now. So margin requirements can vary by broker, and also based on whether you're trading the micros or the E-minis. Nell, do you want to touch on that?
Yeah. On average, we're margining about 450 per contract on your credit spreads currently. So the margins are not very high.
Yeah.
Yeah. So for 10 contracts, it would be 4,500 then roughly.
Correct.
Okay. Similar, I guess Eric asking the same thing. How much was needed to make those profits that were shown on the slide? For example, was it a 10K account or a 25K account?
Well, the nice thing is it just shows you the bottom line. So the margin on all those positions on a per contract basis on average was about 450. So, and we didn't have all those positions on at once. So in theory, you could trade with a $5,000 account because that was over a period of time. The average holding period is what, 14, 17 days, Jeff, if I'm not mistaken? I'm not looking at the.
It's 11. Yeah, average holding time is 11 and a half days. It's, I would say most of the time we'll just have one trade open. There may be a little overlap. It would be unusual for us to have more than 2 trades open at any time, really.
Yeah, exactly. So it's a very low margin to usage ratio.
Okay. Irene, so trading options on futures means I can trade in an IRA account without running afoul of the pattern day trader rule?
Correct.
Giddy up. I like not running afoul of that. So Irene, there you go. Mike, I think we answered that one as far as that. Okay. Gene, do you only have the risk to lose all or more than all of your risk money / trade when you sell the option? Are you still protected from loss when you're long the option? When long the option, you can only lose the premium you paid to open the trade. Is that how it works with options on futures?
Do you want to touch on that?
Yeah. I mean, at the end of the day, if you're doing the credit spread, you have your maximum risk. The verticals are maximized risk based on the debit. The exposure on outright sales of options is like a futures contract, no different in the sense as far as risk. It's controlled by exiting the trade or rolling the trade out.
Okay, perfect. Yep. Were those spreads trades on regular or micro contracts?
The ones that we shared in the performance track record were on the E-minis.
Okay, perfect. Already talked about commissions. Jeff, what is the ROI on the average profit per trade?
ROI percentage?
Yeah, that's a confusing one. It just says ROI.
Well, you mean like what's the return on what you're tying up in capital?
Yes, that's probably what it is. Yep.
Oh, okay. Yeah, so we include that in when you join the service. There's a shared spreadsheet that you get access to with all of the trade recommendations, and it outlines the ROI on risk capital. So it's going to vary based on whether it's a credit spread, a debit spread. It's so vary based on strategy. And it would be hard for me to put kind of an average on it without running a formula in the spreadsheet, which I don't have in front of me. But we can do that for you if you want. We'll have to maybe shoot us an email and we can let you know.
Yep, that makes sense. Folks, real quick though, so Nell, you're saying about 10K-ish is good to auto trade. You can still open a futures account if you want to. If you don't want to do the auto, you don't have to do the auto trading, right, folks? You can just open a futures account with CTG and kind of fish for yourself. If you want Jeff to fish for you and you kind of approve it, you can auto trade. Nell, what's the minimum just to open a regular CTG account?
$5,000. And we're still old school. We've been doing this for 30 years. So if those want to be self-directed accounts, our platform is pretty awesome.
Exactly.
There's no cost for the platform. It's very unique that you could do, if you're an option guy, you could even do diagonals, and a lot of options restrict you from that.
Yep.
So we'll work with you on that too. So even if you're self-directed, we have no problem in, having a pulse and talking to you, a human being. Imagine that.
Jeez. I love it. Stephen, do you include a statement as to what are the determining factors of a trade? I ask this since I will most likely not know the relevant factors of the underlying trade.
Yeah, so we, in addition to the trade tracker spreadsheet, we have a Word document that outlines all the details of the trade. And with a brief commentary of why we're selecting that strategy for that trade opportunity. And then in addition to that, that's why we include in this package the video tutorials and ebooks, because we obviously there are people out there that just want to have the strategy traded for them or place the trade themselves in their brokerage account and not think about anything else, and that's perfectly fine. But then there's other people that want to learn how to do this on their own as well, and so that's why we include the robust education, so that if you are a curious person like me, you can know why we're doing what we're doing, or maybe do it on your own. And someday if you choose. So great.
I love it. Yeah, no, it's same thing at TOPGUN Options, folks. Demo, do. We got the training and then the do part of it. So it's the demo and the do. James, I'm unclear on the auto trading. Do I have to approve each trade?
No, it's you sign a form that will send you DocuSign once you determine the dollars that you're going to invest and the number of contracts, which we'll discuss with you. You're just signing a form that gives us the authority to trade on your behalf, specific off of the signals that Jeff's pushing our way.
Okay, awesome. Ari, does CTG have a website? Answered that. It's on the screen. Bob, IRA accounts. IRA accounts. We need a custodian, correct? And how does CTG use?
We negotiated a fee. There's an annual fee. I think it's $245 a year for the custodian. And the account would be held at StoneX, which has been around for over 100 years. They are also a 100 Fortune company. So we'd have your account set up specific. If it's an IRA account, we'd prefer to have you set up with StoneX. The margins will be reduced and your fee model. But Midland is the company, and they've been around for about 25 years, and they've been approved by Stone in the sense that they have to do their due diligence on who they handle with the record keeping as well.
Okay, cool. Another one. Do you auto trade? Any adjustments needed to manage any losses?
Yeah, it's a fluent. I mean, it's not a just sit with the trade scenario like Jeff was talking about earlier that dictate on the market conditions. We'll make adjustments and we'll trade those adjustments on your behalf. So we'll continue to monitor the trades for you. And literally, we're reachable pretty much 7 days a week.
Exactly.
Maybe not as quick on the weekends. I might be grocery shopping or something on the weekends, but we're reachable.
Yes. Joe, can I trade the options on futures after hours / pre-market?
Yeah, as long as the markets are open. And this is the non-auto trade. I will mention that if you sign up for auto trading and you want to self-direct, your self-direct transactions would be handled in the second account. You could use the same platform. It would just be a different account number so that you're not intervening on the trades that we're trying to transact on the auto trading.
Okay. Stephen, I filled out the member package, but the form will not process it. Stephen, which page? The CTG page or this page? Which one? Give me a heads up and we'll jump back to that. Jim, are you setting up the self-directed IRAs? I don't know what setting that up means.
Well, we'll handle the auto trading part.
Yeah.
So I think you put the link of where to go, or you could just reach out to me directly at nsloane, SLOANE @ctgtrading.com.
Okay.
Happy to help you.
Okay. Troy, what trading platform do you use and can I use on a smartphone? Obviously, it's this trading platform, but I'm sure now can you use all this stuff on a smartphone?
Yeah, so it's actually iBroker is what they would download for the mobile device. And if you want to just go self-direct, we do have access to multitudes of different platforms. I didn't talk about this earlier, but Capital Trading Group is an independent brokerage firm, which means that we work with multitudes of future commission merchants. Client kind of picks their platform. The most popular platform is the CTG Pro, and I could set you up for a demo. Cost you nothing. You'll have 28 days of free data quotes and all the markets if you want to check it out. I'll send you videos too.
Great deal. That is a very good deal. Stephen, James or Jim, maybe you can, they're saying he filled out this form. So maybe reload the page, Stephen, the Altos page. Maybe you got to clear your cookies or something like that, because I don't see anybody else having an issue, but Jeff can look into that on the background.
Yeah, and if you continue to have an issue, you can give us a call at our toll-free number. I'll actually put that in to the chat here for you right now and place the order over the phone as well.
Perfect. Okay, cool. Yeah, so Jeff will throw the number in the chat box there. A couple more questions because we don't want to keep you all day, but this is great stuff. Ken, do we have to have 10K for auto trade? Does 5K work with auto trade?
Yeah, we could do 5K because I can't recollect when we've had more than 2 positions on at any one time, which would equate to about $1,000 margin. So yes, you could do 5,000.
Okay, awesome. Let me, I'll put this in the chat box here, folks. So if the page isn't working for you, Control V. So there you go. The number is in there. It's 800-895-9348 if the order form's not working for you. Jim, if you're a lifetime member, I'm going to post this later today in our members only thread. I obviously don't want to put this out right here because everybody will magically turn into a lifetime member. So if you're a current lifetime member, shockingly, if you're a current lifetime member, just put your name, email, phone number, and then maybe if you want to auto trade in there, just but I'll send this to Jeff eventually. So if you're a current lifetime member, you're good to go. But I'm not going to post that right now. Obviously, a couple more questions and we would be done. You bet, Jonathan. The $14.95, that 78% discount is good for us TGO people. Jeff is also putting down the ladder to help save and change the lives of veterans, first responders, or families, and it's awesome. So this is a significantly discounted deal. So Jonathan and I would definitely hook that up. Judy, who owns Altos Trading? Well, there you go, Jeff. Who owns Altos Trading?
That would be me. I'm the president and founder of Altos.
There you go, Judy. Fred, how much is lifetime access? Fred, you can shoot me an email, Wiz, WHIZ at Top Gun Options, and I can tell you how much the lifetime membership is. Crew, Pena, can we use HSA accounts? I don't even know I don't know what that means. Do either of you guys know what an HSA account is?
Health savings account? That'd be my only
guess. That's the only.
If it is, I would think so. But while we move on to the next question, I'm asking.
Yeah, I like playing Stump the Chump with Nell. Geez, she's HSA. Somebody said health savings account. Brad is answering. Most HSAs don't allow selling options. Okay. Jack, FYI, I had a problem with the website order form, but was able to get through to the 800 number. Okay. So, yeah, folks, if the page isn't working, I posted the 800 number in there. Brad's saying, unless covered calls. I get it. And Jim's also saying most HSAs do not allow. But Nell is the ultimate arbiter of that, and I'm sure she's clicking away in the background to do that stuff. A couple more questions, folks, and I swear we will get going. But this is good. This is great stuff. Nell gave out her email. If Jeff, you want to throw your email in there as well, if folks have questions, concerns, by the ways, after we do this brief, and 1,000 people asking for the replay. As soon as we close this brief, it takes, 20, 30 minutes for the replay to render, and then I'll throw it back in there. So
yeah, and Wiz, I'm not able to chat out to the audience, so I just
there you go. Yep. I'll just put it in the chat box for you. Patel, on auto trading, what is expected range of? I'll ask it, and we'll see what his answer is. What is expected range of annual return?
Well, our disclaimer will be longer than giving an answer on that one.
Exactly. It could be from 0 to infinity. There's your answer.
It truly does depend on the strategy and the market conditions. These have been this environment's been much more challenging than one I've seen in a long time. And the credit spreads limit our potential gain, but do limit our risk. It does depend on how many contracts you're doing.
Yeah.
That's about it.
Yeah, exactly. It's just such a dynamic market right now. To Nell's point, man, I've been doing this for 30 plus years, and this is a very interesting market, especially now with this kind of rip your face off melt up going on here, this FOMO rally. What goes up must come down. All right, couple links. I'm sure Jeff is in the background typing away to his techies. We'll try and get the order page fixed if there's any issues. But again, the number is in the chat box there. You can call that 800 number, and it sounds like a bunch of you guys are, which is fantastic. Christine, Wiz, what do you mean TGO lifetime member and the service with Altos? Christine, you're grandmothered in. So I'll post this spreadsheet over here, and you all will be included. But that's for Jeff's product. Christine, if you want to do the auto trading, you obviously got to sign up with CTG. One more time, here's the link to start opening your account with CTG. Stand by. Randy, PayPal ? Jeff, do you take PayPal?
We do. Yep. And that should be an option on the order page for you there.
Okay. So there you go. Yeah, should be down here as well. Okay. You know what? Nell, let's turn it over to you first, and then Jeff, and then I'll wrap up. So Nell, do you have any closing comments or oh, by the ways?
I just want to express great appreciation for everybody. Everyone's busy in general, and the fact that people came in to listen to this. I'm grateful, and bottom line, let's fight. And on the broker side of it, whatever you guys need, if you want to be self-directed, we'll set you up with a platform. No problems there.
Great. Yeah. And yeah, I echo, of course, what Nell says, and just want to express my gratitude for all of you taking time out of your day to join. And, our intention is for you to get a lot out of this and be successful with options on futures. That's what we're here for. But we're also here for an incredible cause, the No Fallen Heroes charity, which again, I think is just amazing. That I've never seen, a trading education firm do something like this, and it's just really great. So yeah, I want to obviously thank all of you for attending, and all of you who are joining. We're getting lots of people coming into the service, so I'm really excited to work with all of you moving forward. And then, of course, a big thanks to Nell and Wiz for making this happen.
You bet. Thanks, Jeff. And thanks for the significant discount. And Nell, thanks for pitching into the fight. It's humbling. Definitely a God moment. Let me give you the link right now. I'll get the replay posted as soon as I can up here on the YouTube page. Let me just give you that link real quick. Nell, I didn't read them all, but there's a middle chunk of comments in here that, as you can imagine, so a lot of folks just.
Well, they could just email me directly too. I'll address.
You know what? I'll put your email in the replay too. So now,
okay.
No, I mean that they were all very, very nice comments about you and Frankie and Travis and thanking you. So I didn't read all those in the middle, but they were, yeah, they were tugging at my heartstrings. So, but nice. Thank you for all that. The big middle chunk of comments there. So final call. You got the 800 number in the chat box. Here's one more time. It looks like.
And Wiz, sorry to interrupt you, but I think we figured out what's happening with the order form. And so the order form's working correctly, but what happens is if you don't, we have billing terms and legal conditions like every company, and those need to be acknowledged before hitting the submit order button. So make sure that you're checking that box that says, do you acknowledge our billing and legal terms? And that's probably why it looks like it wasn't working for some of those people.
All right, giddy up, folks. Check the box, man. You're not buying. You don't buy anything nowadays without checking the box. Obviously, agree to the terms and the conditions, especially on CTG's website. I guarantee, especially dealing with Uncle Sam, there's a lot of stuff. So, Jeff, thank you, my brother. Look forward to a great strategic partnership with you. And then Nell, obviously, can't thank you enough. God bless you and your family. Thank you for putting down the ladder to pitch into the fight to save and change lives. And I'm looking forward to doing this maybe once a quarter or maybe once every other month to get some new folks on board. So, folks, we're out of here. Thanks for your time today.
Thank you.
You bet. 720 people registered and 313 at the peak here. So If you didn't join us and you're watching us on the replay, I'll have the links to open an account and then open with the trading service here. So everybody have a great rest of your day. Happy hunting. Make sure you hedge. Fights on. Namaste, and God bless everybody. And we'll see you next time. Welcome aboard.
Thank you. Bye-bye.